This is Horizon's Middle East and Africa. Our top stories this morning. US Secretary of State Marco Rubio says sanctions on Russia will remain at least until a deal to end the war in Ukraine is reached. President Trump says he'll probably meet Russian President Putin before the end of February. Meanwhile, Ukraine's Zelensky cancels a trip to Saudi Arabia after being sidelined from talks. Hamas offers to free all remaining Israeli hostages for Palestinian prisoners in the second phase of its truce in exchange for a permanent ceasefire and Israel's full withdrawal from the enclave. And President Trump says he's preparing tariffs of about 25% on cars, chips and pharma imports, with an announcement coming as soon as early April. Well, it's just gone 8 a.m. across the Emirates. It's 3 p.m. here in Sydney. I'm Paul Allen in for Jemima Besetche. Let's take a look at the impact of those tariff announcements from President Trump on some of the key assets that we track. Got the US 10-year, not a great deal changed on the announcement. There could be a 25% tariff. Chips, cars, drug imports. We'll get more details on April the 2nd. But we also heard from the Fed's Mary Daly saying, look, the Fed's going to remain restrictive until inflation falls. And that, she says, is going to take a lot longer than anybody wants. The Fed also keen on taking its time to assess the impact of Trump policies. Got the oil price a little bit stronger. Brent crude there, 75.87 a barrel. Eurasia Group thinks OPEC Plus could boost supply in the second quarter. The market is showing enough demand for Middle Eastern crude, according to Eurasia Group. And take a look at gold. It is getting very close to that $3,000 an ounce barrier now. It is off record highs, but we've heard from Goldman Sachs raising its year-end target for gold to $3,100 an ounce due to central bank buying and inflows into ETFs. So if there's one thing we can say with certainty, there's a lot of uncertainty around the geopolitical environment, the tariff scene as well. Here to take a closer look at the impact of that on equities in Asia, we've got Avril Hong in Singapore. Avril.
Yeah, the only certainty is uncertainty, as you say, Paul. I mean, we're seeing that kind of playing out in the region with the benchmark for stocks snapping a multi-session winning streak. So most of the equities in the region tracking lower, tracking losses, and this is despite the really strong showing on Wall Street. And this is also, of course, coming against the backdrop of those tariff threats from Trump, threatening tariffs on autos, on chips, pharmaceuticals. So unsurprising, perhaps, that today the Japanese automakers not doing so well, Chinese tech also seeing slight losses. And against this backdrop, also worth noting, we did get the RBNZ cutting rates today, although the governor signaled that, those larger than usual rate cuts, well, that's coming to an end. And we saw the Kiwi dollar actually recover some lost ground against that backdrop. Paul.
Thanks, Avril Hong there in Singapore. Let's get some breaking news on the Bloomberg. We've been waiting for this one. It's the big one. It is HSBC full year profit. Got a pre-tax profit there of $32.31 billion. That's a bit better than the market was expecting. They were looking for a number of about $31.68 billion. HSBC also announcing a buyback of up to $2 billion as well. So annualized reduction in the cost base, $1.5 billion by the end of 2026. So the market was looking for some clues on what sort of cost savings we could expect from some of the restructuring that we've seen from HSBC. But that headline number there, pre-tax profit for the full year, beating estimates, $32.31 billion, and a buyback of $2 billion. We'll have more analysis of that a little bit later. Well, let's get back to one of our top stories. President Trump saying he's probably going to meet with Russia's Vladimir Putin by the end of the month. And that's after the top US and Russian diplomats raised the possibility of broader cooperation. And this follows a meeting in Saudi Arabia on steps to end the war in Ukraine. Marco Rubio and Sergei Lavrov promising to have high-level teams work on a truce that is acceptable to all sides. Now, Rubio has since said that sanctions on Russia are going to stay in place until a deal is reached.
We're going to appoint a high-level team from our end to help negotiate and work through the end of the conflict in Ukraine in a way that's enduring and acceptable to all the parties engaged. The third point is to begin to work at a high level as well, to begin to discuss and think about and examine both the geopolitical and economic cooperation that could result from an end to the conflict in Ukraine.
Well, joining us more now for more on this, Bloomberg's senior reporter in Dubai, Henry Meyer. So, Henry, how did these talks end? Did they seem to make any meaningful progress?
Yes, hello. I mean, it's obviously we don't know the details of any agreements that were reached during those talks. If you judge, however, by the statements that were made, the public statements by both US and Russian officials, it certainly appears as though the talks did produce some progress. And, the next step that we're going to see is clearly the summit between the two presidents, which could happen very soon. Obviously, there are still some serious points of disagreement between the two sides. One of them is the peacekeepers that would eventually be deployed to monitor any ceasefire. The Russian Foreign Minister, Sergei Lavrov, repeated the Russian position yesterday that they would not accept any NATO peacekeepers. President Trump, however, has said that he would welcome the presence of European troops on the ground. That I think is going to be one of the topics going forward for the discussions. In addition, of course, the Russians' wish for sanctions relief.
Something missing, though, that is Ukraine. I mean, the country that the peace talks involved, they weren't there at the table. Europe also seems to be totally cut off from negotiations. So how enduring can any peace be when you exclude two key stakeholders?
Yeah, I mean, I think that the Trump's approach to this is that he sees that he needs to reach a deal directly with the Russians. Clearly, there are two belligerents in this conflict, and Ukraine is going to have to be involved in that process. Europe, of course, is also key, but the most likely scenario, I think, realistically, is that Russia and the US will have this joint track where they will move forward on these negotiations, and they will be informing and consulting with Ukraine and Europe, but they will not be equal participants at the talks. I mean, I think that's clear from what has been said.
Well, in terms of a meeting between Trump and Putin, when could we potentially see that happen, and what might we expect from such a summit?
Well, President Trump said himself that he expects it to happen by the end of February. I mean, the end of February is next week. One of the senior Russian negotiators said that was unlikely. Well, we'll see. Certainly, it's imminent. In terms of what we could expect to see from it, I don't think that meeting would take place without a guarantee that there would be some kind of a result, some kind of a concrete result. And the most likely would be some announcement of a move towards a ceasefire, perhaps not immediate, perhaps it would be several weeks later. But, President Trump is not going to sit down together with President Putin, which, after all, for the Russians would be a great success after the 3 years of isolation they suffered since invading Ukraine. He's not going to do that without some, thing that he can sell as a success.
All right, Bloomberg senior reporter in Dubai, Henry Meyer, thanks for joining us. Now, Hamas says it's ready to exchange its remaining Israeli hostages all at once with Palestinian prisoners during the second phase of the Gaza truce. The move could be a step leading towards a permanent ceasefire and the full withdrawal of Israel's forces from the enclave. But Hamas is refusing to be expelled from the Gaza Strip or disarmed, saying any future arrangements for Gaza is going to be based on national consensus. Joining us now with more is Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa and Russia. So, Stuart, in terms of reaching a permanent ceasefire, how promising is the road looking?
Good morning, Paul. I think those of us that have been looking at the region for a good long time would be somewhat sceptical that you could have a permanent ceasefire in the sense of there will never be any fighting in the future, because it's gone on for decades and decades. What I think we can perhaps hope for is an extended pause, some attempt to rebuild governance within Gaza, and quite what that looks like is one of the more contentious issues, I would argue. Secondly, how do you deal with Hamas, even assuming, let's say, they're no longer governing Gaza? What do you do about all the weapons? What do you do about this organization as a whole? Because remember, the founding charter of Gaza is the destruction of Israel. How do you square that circle in thinking about a permanent ceasefire? So there are lots and lots of hurdles to get over here, but obviously we are in a significantly better position than we were, say, even a couple of months ago.
Well, we're seeing some images here of Gaza, what's left of it. There is a monumental reconstruction task ahead, and Egypt's floated this idea of a $20 billion reconstruction plan. What more do we know?
I mean, that's about it at the moment, because just again thinking about the logistics of how much rubble needs to be moved out before you can even start the rebuilding process, how many munitions lay abandoned all over the enclave, and again will need to be removed very, very carefully. I mean, this is an incredible logistical challenge going forward. So it's good that the parties are starting to talk about it. You know, it's really easy to come out with a big, large number and say this is what we think it might look like. Key questions: who's going to pay for it, who's going to do the work, and what is Gaza going to look like after it's all done? Because remember, Gaza's been rebuilt multiple times, and on multiple occasions you end up back in the situation that we're seeing at the moment. So I think it's something that's going to have to proceed very cautiously and very slowly. But again, you know, we are in a much better position than we were even a couple of months ago.
So Egypt's also proposing an emergency Arab summit on the 4th of March. What's the likely outcome from that?
I mean, I think it'll be more of the rhetoric that we've seen over the last couple of weeks. So I think a very specific statement saying that Gazans should not be moved out of Gaza, even temporarily. In other words, the reconstruction can take place with them continuing to be there. So that's, you know, a fairly important statement they're going to make. And secondly, I think, again, we're going to see the beginnings of some sort of negotiation about how exactly you're going to finance all of this. Whether the final cost ends up being 30 billion, 40 billion, 50 billion, whatever the number is, that money is going to have to come from somewhere. And we presume it's going to come from some sort of consortium that will involve international bodies, along with the key players in the region, and who else, you know, whoever else wants to be involved. But again, this is going to be a multi-year effort. You know, Gaza's not going to be rebuilt, nor are we going to have a permanent ceasefire in the next couple of weeks. It's going to be a long haul.
All right, Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Thanks for joining us. Now, it's reported the IMF has said it's open to a new loan agreement with Lebanon following discussions with its recently appointed finance minister. The new government formed this month ended more than 2.5 years of caretaker leadership. AFP quotes the IMF as saying discussions could include a new program that could help restore debt sustainability and rehabilitate the economy. Still to come, hear why RBC Wealth Management Singapore says they favour US equities and recommend riding the Chinese equity rally. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Well, San Francisco Fed President Mary Daly says policy needs to remain restrictive until there's more progress on inflation.
At this point, policy needs to remain restrictive until, you know, from my own vantage point, until I see that we are really continuing to make progress on inflation. At this point, policy's in a good place. We took 100 basis points off the rate last year. That recalibrated policy put it in line with the economy we have. And now we want to be, in my judgment, careful to before we make the next adjustment.
Well, joining us now is Gautam Chadda, Head of Investment and Portfolio Advisory at RBC Wealth Management in Singapore. Gautam, thanks so much for joining us. I just want to pick up on those points Mary Daly was making there. She went on to say that this battle against inflation is going to take a lot longer than anyone wants. So the Fed's in no hurry to ease. What's your outlook around the inflation picture and the future path of Fed easing?
Good afternoon. Yeah, so I think the Fed is put it quite well there, Mary. Ultimately, the recent economic data showing resilient, if not slightly higher inflation, is certainly leading to markets being a little bit more sanguine in terms of expectations for rate cuts this year. And when we look ahead, our own view is for 0 rate cuts in 2025, a number of reasons for that. The domestic picture in the US remains resilient. Growth data remains positive. Employment data and the labor market data, again, remains robust and strong. And so there is an element of ticking up, inflation ticking up a little bit higher than perhaps the Fed thought was happening towards the end of last summer and into Q3 when they did their initial rate cuts and readjustment cuts. So from the perspective of the new US administration also enacting, or certainly announcing, if not implementing, a whole series of tariffs and policies that may realign global trade, there's particularly some potential upside risk to inflation that's very uncertain. I think you said it earlier in your show. The one thing we can be certain of is that uncertainty is likely to persist for some time. So having taken account of all of that, it really leads us to think about, well, how do we position investor portfolios in this environment? And for us, the key is that with interest rates high, but potential for it to go a little bit higher if inflation comes through, actually introducing some floating rate bonds into client portfolios makes a lot of sense at this level.
So floating rate bonds would be one of your picks for this environment. Are there any particular other assets or entire markets, in fact, that you'd be looking to embrace or avoid based on this conversation we're having around tariffs?
I think where the tariff debate really comes into it, and when we look at clients in diversified portfolios, really fixed income and the rates exposure within fixed income is where you really want to capture or reduce that volatility and capture some stability. And so adding some floating rate exposure makes sense. If interest rates go up from here a little bit, the mark-to-market volatility on your floaters won't necessarily be that volatile, and so you can redeploy that into other assets that may have fallen if the inflation is getting out of hand. And on the downside, if there are a couple of rate cuts this year, you're really only giving away 50 basis points from 5%. So again, your downside is capped. And so I think the fixed income component being some floating rate exposure makes a lot of sense. Other markets that we favor, certainly US equities, given the strength of data coming through. And it's very interesting, the earnings season unfolding at the moment, with about 78% of companies having reported till last week. We're seeing that the S&P 500, excluding the Mag 7, EPS growth rate was about 7.5% so far, with some companies still to report. That's a lot higher than it was in the previous quarter, which was averaging around 3.7%. So some positive signs still to come in terms of the broadening out of the US performance in the index there.
Yeah, you're certainly not alone in your view on US equities, and that's the Bloomberg question of the day, in fact, is how long is this TINA trade, there is no alternative trade, going to endure for US stocks?
I think the alternative is really now available in a couple of asset classes. So fixed income is actually paying meaningful yields. One of the areas within fixed income is clients can actually reduce credit risk and improve credit quality in the portfolio without compromising on a reasonable yield and return expectation. So I think we're out of that. That's certainly there. The other drivers of the US economy, resilient earnings growth, really the consumer sector, which drives about 70% of GDP, is driven by domestic consumption. A healthy consumer continues to propel this economy forward, and we still see in the most recent data the signs are still positive around the consumer, and so this trend could set to continue for a little bit longer.
What's your view of Chinese assets at the moment? Because I know you say ride this rally. It's a pretty thin rally at the moment. How do you approach that market?
We remain overweight Chinese equities, and what we've seen is that the Chinese investors have been hit over a number of years from issues on the bonds and the property market, and also the equities have lagged. But you've seen a coherent and cogent response from the government and policymakers to really try and address some of the concerns economically. I think what we've had so far are initial phases of optimism fueled by retail investors, and so what we're really looking for is some concrete policy announcements to come through in the March 2 sessions meetings to give us a bit more comfort to maintain those positions.
All right, Gautam Chadda, Head of Investment and Portfolio Advisory at RBC Wealth Management in Singapore. Thank you so much for joining us. Still to come, HSBC's full-year pre-tax profit beat analyst estimate. We'll take a look at the bank's worldwide restructuring program a bit later this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. President Trump's first 30 days in office have seen significant shifts in US policy, including threats of tariffs on allies such as Canada, Mexico and the EU. Muddy Waters founder and CEO Gautam Chadda says following through on these geopolitical threats may not be practical.
The other issue that Trump has, if he's going to really go crazy with tariffs, is inflation. That's a big part of how he won the election. Now, he does have smart people around him. Scott Bessent, Treasury Secretary. I think Scott understands that you can't just go and jack up or impose tariffs on all imports and without causing inflation and diminution in the standard of living of Americans. So, but what's he going to do and when? And just because he hasn't gone crazy with China doesn't mean that he won't down the line. I mean, it's kind of funny because he's using, I wonder if he might at some point discredit himself with at least his tariff threats. I mean, Colombia didn't let a plane land, right? So he gets on Twitter like, oh, we're going to hit Colombia with these tariffs. Okay, we'll let the plane land. But I mean, how many times can he get to do that? He humiliated Trudeau with the tariff threat. I kind of wonder if the game there, and also with the EU and the tariff threats, I do think that he's trying to push the political left out of power. And I suspect that's because he views that if we get more right-wing governments in the West, we're going to form a better, stronger coalition against China. So I don't know how serious he is about the imposition of tariffs in those situations. Look, he says a lot of things to kind of move the goalposts, like his comments about Gaza, right? I don't think anybody considers it to be practical to relocate, 2 million Palestinians and to turn it into a resort. But I think what he's doing is he's basically saying to the Palestinians and to Hamas that, hey, you might look around here and see that all you have is rubble and think that you have everything to gain and nothing to lose by continuing to focus on the destruction of Israel. Well, you know what? I'm going to move the goalpost on you, because maybe what you should be focused on is actually not being shipped out of this land. Like, you think Israel's going away? Maybe you'll go away. Now, that's not practical, as I said, but it's a way to change the conversation and to change thinking. So I think that tariffs, or all the tariff threats, are really part of that overall strategy that he employs.
And that was Muddy Waters founder Gautam Chadda. Let's take a look at how equity futures are tracking at the moment. We did see the S&P hitting fresh records in the US in the last session. Futures are currently pointing higher as well by about 1/10%. Nasdaq futures better by 0.2%. Looking ahead to the open in Europe, seeing a little bit of a risk-off sentiment there. Right, still to come, we're going to be speaking to Bohl, Senior Middle East and North Africa Analyst, about Saudi Arabia's growing role on the global stage. This is Horizons Middle East and Africa. Our top stories this morning. US Secretary of State Marco Rubio says sanctions on Russia will remain, at least until a deal to end the war in Ukraine is reached. President Trump says he'll probably meet Russian President Putin before the end of February. Meanwhile, Ukraine's Zelensky cancels a trip to Saudi Arabia after being sidelined from talks. Hamas offers to free all remaining Israeli hostages for Palestinian prisoners in the second phase of the truce in exchange for a permanent ceasefire and Israel's full withdrawal from the enclave. And President Trump says he's preparing tariffs of about 25% on cars, chips and pharma imports, with an announcement coming as soon as early April. Well, it's just gone 8:30 a.m. across the Emirates. It's 3:30 p.m. here in Sydney. I'm Paul Allen in for Jemima Besetche. Let's take a look at how markets are tracking at the moment. We've got not a great deal of movement in the yield on the US 10-year, just hovering around that 4.54 level. We did hear from Mary Daly a little bit earlier of the San Francisco Fed. Fed, stressing that, look, the Fed's in no hurry to move, wants to make sure inflation's well and truly beaten before the next rate cut. And she says, look, that's going to take a lot longer than anybody wants as well. Got an oil price showing some modest gains there, 75.88 for a barrel of Brent at the moment. And gold continuing to move higher. It is off session highs, but that $3,000 level now firmly in sight. Goldman Sachs has raised its year-end target for gold to $3,100 an ounce due to central bank buying and inflows into ETFs, not to mention the uncertain geopolitical outlook. Let's check in on how markets in Asia are faring. Avril Hong joins us now in Singapore. Avril.
Yeah, Paul, let's take a look at the G10 currencies because the Bloomberg dollar looking pretty flat today, but some of these FX moves are climbing. I mean, you look at the Japanese yen, for instance, today we did get comments from a BOJ board member which suggested taking a gradual approach when it comes to interest rate hikes to cap the upside risk to inflation. And he talked about the need to assess the economic impact each time there's a hike. So sounding a bit dovish, but if you look at the market reaction, it looks like these yen bulls are potentially going to take things in their stride. I mean, you had MLive's Mark Cranfield, for example, talking about how the path of dollar-yen in the medium term is still going to be one downwards, given how, if you're not seeing these market ructions, that the BOJ's path is still one of continuation of rate hikes. And then, of course, today you got the RBNZ cutting rates 50 basis points, but the Governor, Adrian Orr, also suggested that for the next two meetings, April and May, that you can assume 25 basis point steps. So also that's being reflected in the reversal of the earlier losses on the Kiwi. Paul.
All right, Avril Hong in Singapore. Thank you. Well, top US and Russian officials have held talks in Saudi Arabia to discuss how to end the war in Ukraine. But the absence of Ukraine from these talks has fueled concerns that a deal by the two powers could leave Europe on the sidelines. After meeting his Turkish counterpart in Ankara, Ukrainian President Vladimir Zelensky says he's now cancelled his forthcoming visit to Saudi. Well, joining us now is Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Ryan, I want to start there. I mean, it is encouraging, obviously, to see some preliminary talks at least taking place between the US and Russia. But the war is in Ukraine. Without Ukraine at the table or Europe, how can a deal be made to work?
Well, I would describe these as the first step in a very long journey in a diplomatic process to finally, at the very least, freeze the war between Russia and Ukraine. And as you noted, without those key players at the table, anything that's agreed to by the Russians and the Americans is mostly for domestic consumption in Moscow and in Washington, D.C. And so we still have a lot more that we need to observe and more steps that key diplomats need to take before we're looking at a viable framework that might actually freeze this now 3-year-old conflict.
Well, let's take a look at the venue for these talks as well, being held in Saudi Arabia. What sort of role do you see for Saudi and some of the Emirates as well in facilitating a peace deal in Ukraine?
Well, we want to think of the Saudis, the Turks, the Qataris, the Emiratis. They're all overall neutral in this great power competition that is emerging. They want to sell oil to the West, and they want to maintain commercial and diplomatic ties with the Russians, with the Chinese, et cetera. And as part of that strategy, they're all trying to be constructive in the ways that they can when great power competition really erupts into these kind of conflicts as we've seen in Ukraine. And so it's no surprise that Saudi Arabia is a venue for some of these peace talks. I'm sure that Turkey will attempt to be, and Qatar and the Emiratis will as well. All of these states will be trying to flex their diplomatic muscle to try to host this sort of process, because in doing so, they build out their soft power stature, and they signal, more importantly, to not only the West, but also to Russia and more distantly China, that they aren't taking sides in these conflicts, and they're looking to be as constructive as possible. And that creates the conducive conditions for investment and for commercial ties, which is really, at the end of the day, what they're really seeking.
Russia is, of course, though, an OPEC Plus member. Does that raise any questions about the neutrality of those Gulf states?
Well, not as much as you might think. And they are competitors in one way, in that there is a possibility of of Russia and Saudi Arabia repeating history like they did in 2020, where they had a price war. But at the same time, collaboration is really what Saudi Arabia's strategy is in the energy markets these days. They don't want to cause price wars. They don't want to destabilize the energy market in ways that might cause unforeseen surprises for their own budget. So at the moment, it's really about maintaining price stability. And that actually plays well for Washington, where President Trump is very sensitive to gasoline politics and very much wants price stability for himself.
Of course, there's another major conflict in the region, and that is Gaza, a fragile peace holding at the moment. How likely do you see that peace, that ceasefire becoming permanent, and what are the risks to that?
Well, the idea of a permanent ceasefire in Gaza, I think, is unfortunately a bit far-fetched right now, in large part because both Hamas and Israel have diametrically opposing demands. Israel wants to remain in the Gaza Strip, and it wants Hamas to exit the Gaza Strip, and Hamas wants Israel to exit the Gaza Strip and to allow them to resume governance of the Strip, or to at least have a role there. And as long as those demands are hardened, and right now I really don't see either side climbing down from those, it becomes inevitable that there will be ceasefire violations, and both sides will be looking for ways to undermine the other and trying to make it so that it looks like the other side is the one that caused the ceasefire to collapse. And we did see Hamas very recently attempt to a gambit on that front, where they said they weren't going to release some hostages because of ceasefire violations by the Israelis. That ended up not falling through, and we didn't see the hell to pay or all hell being let loose last weekend as the Israelis threatened. But I suspect events like that will become more and more common, particularly as we move into the next phase, starting next month.
Yeah, the idea of permanence, as you say, does seem far-fetched, especially when we consider that this conflict is basically a cycle of reprisals spanning decades. And with that in mind, how challenging is the reconstruction effort going to be? Where do you see that heading?
That's a very significant challenge. And without a political solution to Hamas's role in the Gaza Strip, it means that reconstruction is more or less impossible. They can carry out window dressing aid and reconstruction in forms of tents, but getting the Gaza Strip back to its pre-war status is something that it can't be done without the end of combat and without assurances that Israel is going to carry out major campaigns there. And so for many Gazans, they will be left in this impermanent state of semi-displaced people within their own territory. It's a very small territory, of course. And so that will be the status quo for the long term, unless, again, we see either Israel come to terms with Hamas's permanent role in Gaza, or Hamas surrenders, lays down its arms, or goes into exile.
All right, and as you're speaking there, we do see pictures of Marco Rubio preparing to leave Riyadh. His next stop there is Abu Dhabi. All right, Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Thank you so much for joining us today. Let's take a look at some of the other stories that we're following. President Trump says he expects to impose tariffs of about 25% on cars, chips and pharmaceutical imports. There will be an announcement on this coming as soon as the 2nd of April. Roughly 8 million passenger cars and light trucks were imported into the US last year, accounting for about half of vehicle sales. Trump's already announced 25% tariffs on steel and aluminium, and those tariffs set to take effect in March. President Trump's antitrust chiefs at the Justice Department and Federal Trade Commission say that they will follow the tougher US merger review rules adopted under President Biden in 2023, surprising critics who had hoped for a rollback. DOJ and FTC leaders have sent memos to staff saying they'll be keeping the rules, signalling some continuity with the previous administration's stepped-up competition agenda. The federal judge has denied a request to temporarily bar Elon Musk and the government efficiency team from accessing internal systems and removing employees at multiple US agencies. Democratic state attorneys general had contended that Musk is exercising power that's supposed to be reserved only for high-level Senate-confirmed officials. The judge said states hadn't shown they would suffer imminent irreparable harm while the case moves forward. Qatar is to invest $10 billion in India as the two countries seek to deepen bilateral ties. The Gulf state has also agreed the Qatar Investment Authority will open an office in the South Asian country. Qatar's leader is on a two-day visit to India, the first in a decade. Still to come, Sudan's rival factions prepare to announce parallel governments as the civil war rages on, and what the plan could mean for the devastated nation's future. That's up next. This is Bloomberg.
This Sunday, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in Sunday, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. The warring factions in Sudan's two-year-long civil war plan to announce parallel governments. And that's raising fears of a Libya-style split of the devastated North African nation. Joining us now is Ondiro Ogonga. So, Ondiro, why are both sides trying to form parallel governments while the war's still on?
Hi, Paul. So one can argue that this latest move by RSF is just an attempt to gain some mileage and momentum from the political front because they're losing it in the battlefield. They have lost some of the strategic parts in the east that they used to control. And ahead of this announcement by RSF, the army had also made it very clear that they intend to form a new democratic political bloc, and they say that constitutional changes are underway. And soon they'll form a new government from independent people with a civilian prime minister. And so this announcement by RSF and also the army, they're both just trying to get ahead of one another and try and scoop that political momentum while it's still going on. RSF was supposed to sign a founding charter of new government on Tuesday, but it delayed it to the 21st, saying they're waiting for another armed group to arrive so they can do the signing together.
So what happens if both parties go ahead and form parallel governments? This is obviously not a sustainable situation.
There's a high likelihood that the country will be split into two, with one faction controlling one part and another controlling the other. It's just like you mentioned in the intro, Libya in 2014, they separated. Both rival groups control separate parts of the country. So that is what could likely happen in Sudan. But then again, there's the question of governing. How are they able to govern the country? Both sides do not control enough territory to gather enough power and momentum to be able to say that they are the ruling party of the country. So once this RSF rather signs this agreement and goes back to Sudan, then we wait to see what they will do. But so far, none of the parties have enough power to say that they can control the country in its entirety.
All right, Bloomberg's Ondiro Ogonga, thank you. Now let's take a look at some of the other stories that we're following. Some of the biggest airlines in the Middle East are preparing to replenish their fleets, with hundreds of planned purchases set to cement the region as a key growth driver for Boeing and Airbus. Bloomberg has learned that Fly Dubai is looking to purchase at least 200 narrow-body jets, with neighbouring Etihad Airways in talks for as many as 40 wide-body aircraft. Outside the UAE, Qatar Airways is also closing in on an order for about 230 twin-aisle planes in the coming months. Bloomberg understands the company behind the 2016 hit Pokemon Go is in talks to sell its video game business to Saudi Arabia-owned Scopely. We're told the price is being discussed around about $3.5 billion. Any agreement would involve the Pokemon title as well as other mobile games. Baidu has reported a smaller than expected revenue drop for the last quarter, helped by gains in its artificial intelligence business. The generative AI boom resulted in a 26% quarterly jump in cloud revenue for the Chinese company, and that's more than double the pace of growth during the previous quarter. The gain, however, was overshadowed by signs of weakness in its core search business. Still to come, HSBC's full-year profit beats estimates pre-tax. Let's take a look at the bank's worldwide restructuring program up next. This is Bloomberg.
This Sunday, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in Sunday, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Citigroup has lifted Chief Executive Jane Fraser's total compensation package to $34.5 million for 2024. That's up a third from the previous year. And this as she continues to drive a plan for high returns at the Wall Street Bank. Fraser's pay, the vast majority of which is in the form of stock-linked awards, represents the biggest raise among CEOs of large US banks. Australia's Goodman Group is planning to raise $2.5 billion via a share placement to develop a global network of data centres. And this is as the increasing use of machine learning and cloud-based technologies fuels the need for power and storage sites. The property firm says it plans to raise the capital through a fully underwritten institutional placement. Santander plans to invest more than $2 billion in Mexico over the coming years as it seeks to at least double its size in the country. Chairwoman Ana Botín says the country's growth potential and demographics make it the top destination for the Spanish bank, despite Donald Trump's tariff threats. UOB has announced a $2.2 billion package to distribute surplus capital over the next 3 years. Southeast Asia's third largest bank will introduce a new share buyback program and plans a special dividend. UOB's fourth quarter earnings met estimates, helped by growth in lending, even as non-interest related income remained flat. Ford is eliminating stock award bonuses for many of its middle managers, trying to boost performance amid declining profits and high costs. Ford is forecasting a year when earnings before interest and taxes will fall by $2 billion or more. It's also overhauling its EV unit after projecting losses of up to $5.5 billion this year for that business. All right, let's turn to banking. HSBC's full-year pre-tax profit beating estimates, and it's announced a $2 billion share buyback as well. For more, Tamaz Netzel, Senior Analyst for EMEA Banks at Bloomberg Intelligence, joins us. So, Tamaz, talk to us about the results.
Yes, good morning. It's a good set of results, as much as market expected. Across the board, revenues deliver on the cost. Cost of risk a little bit higher in the fourth quarter, but it was driven by two clients, so I don't think it's going to be a massive hit. It's going to be discussed during the earnings call, I think, but the focus is definitely on the cost saving and the revamp announced by the bank across, together with 4Q earnings.
Yeah, tell us a little bit more about the cost savings. What are we expecting to achieve, and is HSBC done yet?
Yeah, that's a very good question. 1.5 billion cost savings. Well, let's put it this way. This is the lower end of the range, which was cited by media over the last three months, I would say. 1.5 billion, it will come probably mostly from wages and salaries. It's around 8% of the wages and salaries for HSBC. We haven't heard any numbers for job cuts, so I think this is a little bit disappointing. We're expecting a little bit more details where the cuts will happen. We have missed this. 1.5 billion, 1.8 billion will be cost to achieve those. So this is gonna distract a little bit the ROT analysis in the next 2-3 years. However, this should help the bank maintain ROT level at mid-teens level, so the same level as we've seen in 2024, and we'll see for 2025. So I would say that is the plan minimum, and most of this has already been preempted by the market with the rally of more than 30% since September for HSBC shares.
Have we been hearing anything about its plans to expand to new markets? We have seen it pushing into Asia and Middle East markets more deeply. Has there been any commentary around expansion plans, and what can we expect to see from the share price over the coming year as well, and the outlook?
Yeah, so when I mentioned, I think they didn't share much information about what they're gonna focus on. Definitely, as they announced earlier, they're gonna cut on investment banking in Europe and in US. So definitely, they will refocus on on Asia, on wealth, and some other markets over there. We definitely doing the earnings call. We're going to hear more about what are the investment banking plans for Asia, where it's going to grow its market share in equity and ECM and M&A advisory. We'll see if they're going to plan to do something around there. And in terms of the share price performance, as I mentioned, on this plan, this cost savings, this ROTE at the meetings level, share buybacks of 2 billion reported at 4Q. You know, it is what the market has expected. So I can imagine that possibly in the next few quarters we're going to see the delivery on the cost savings plan, and we'll see the impact on underlying profitability, and that will determine the price movement for the bank.
All right, Tomasz Netzel, our senior analyst for EMEA banks at Bloomberg Intelligence. Thanks so much for joining us. Okay, let's take a look at how we're tracking in terms of some of the assets we're watching. We've got EU futures looking a little bit softer as we look ahead to the open. S&P futures, meanwhile, ticking a little bit higher by about just 6 points or so. Their NASDAQ futures better by more than 1/10%. We did, of course, see US equities hitting another records in the previous session. So certainly remaining a very popular trade, a topic of the Bloomberg question of the day. In fact, is there no alternative to US stocks? All right, let's look ahead to the next hour of Horizons. MacroVisor co-founder Ayesha Tariq is going to join the show on markets. We'll also get Apollo's economic outlook from Chief Economist Torsten Slok. Well, I'm Paul Allen in Sydney, covering for Jemima Deseche. Stay with us for the second hour. Jennifer Zabasaja is going to be joining us in Johannesburg. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. U.S. Secretary of State Marco Rubio says sanctions on Russia will remain at least until a deal to end the war in Ukraine is reached. President Trump says he'll probably meet Russian President Putin before the end of February. Meanwhile, Ukraine's Zelensky cancels a trip to Saudi Arabia after being sidelined from talks. Hamas offers to free all remaining Israeli hostages for Palestinian prisoners in the second phase of the truce in exchange for an extended ceasefire and Israel's full withdrawal from the enclave. And President Trump says he's preparing tariffs of around 25% on cars, chips, and pharma imports, with an announcement coming as soon as April. Good morning. I'm Jennifer Zabasaja. It is just past 7 a.m. here in South Africa. Welcome to the second hour of Horizons Middle East and Africa. And as we have been watching over the past few days, still a lot of uncertainty with what is actually going to pan out with these tariffs. But there's also many questions about the geopolitical situation, these talks that we saw over the past day or so with regards to the end of the war in Ukraine, still weighing over markets. So let's just take a look at where markets are positioned right now. If we take a look at U.S. equity futures, marginally higher to start the day, perhaps a continuation of what we did see on Tuesday, where we did see chip makers help propel the S&P to an all-time high right now, up just about, S&P futures up just about 0.1%. We're seeing the yield on the 10-year coming down ever so slightly after rising on Tuesday. Right now, the yield is about 4.55%. Of course, we did hear from Fed officials, including Mary Daly, again, resuming a lot of this caution around rate increases, or rate cuts, until we see inflation really progress and come down ever so slightly. If we take a look at Brent crude, trading right now at just about $75.96 a barrel, there's still a lot of questions about this possible postponement of supply increases from OPEC Plus, and of course, lingering uncertainty about what flows look like coming from Russia if we do see the conclusion of the war between Russia and Ukraine. And gold on the board there, pulling back down just about 0.2%. It's this uncertainty around tariffs and also a lot of the geopolitical situation. But still, we have Goldman actually actually raising their year-end target for bullion to $3,100 an ounce right now. Gold just about $2,930, just below that actually an ounce. And I want to bring your attention to South Africa, just going from gold to one of the producers of gold here in South Africa. And that's taking a look at the rand, because today a lot of attention is going to be focused on Finance Minister Enoch Godongwana. He is going to table his budget in just a few hours, and close attention will be paid to what his plans are for reviving stagnant growth in the economy here in South Africa. And of course, there is a lot of focus on the bilateral relations between South Africa and the U.S. after President Trump targeted South Africa with regards to aid. Right now, the rand dollar is little change going into that event, but still very close attention will be paid to that. Let's check in, though, on how markets in Asia are faring. Avril Hong, as always, is standing by in our Singapore studio. Avril, what is on your mind today?
Well, we're seeing Asia stocks moving lower. They're snapping a 5-session winning streak, so the rally of late, it's taking a breather now, and this is against the backdrop of Trump's tariffs. He's threatened them on autos, on chips, pharmaceuticals, but there is also this vibe in the market that's emerging, a bit of tariff fatigue, that he's using this as a negotiation tactic, and that markets ultimately can look past this. So despite the declines, especially among the Japanese automakers, it's actually not that bad a picture. Today on the Hang Seng, you're seeing losses among the Chinese consumer tech names. This is against the backdrop of Baidu, which reported weaker revenue. So there's a bit of concern there among the other Chinese internet stocks as well. But this is, don't forget, after quite a winning run, the Chinese chip-making related stocks, those are the ones that are doing quite well today. Jen.
Thanks so much, Avril Hong. We'll check back in with you in just a bit. That's Avril Hong in Singapore. The U.S. says it will keep its sanctions on Russia until a deal to end the conflict in Ukraine is reached.
In order to bring an end to any conflict, there has to be concessions made by all sides. We're not going to predetermine what those are. We're certainly not going to negotiate this today or in a press conference for that matter. But and there are other parties that have sanctions. The European Union is going to have to be at the table at some point because they have sanctions as well that have been imposed. So, but I guess the point here is the goal is, and we agreed on what the goal is to bring an end to this conflict in a way that's fair, enduring, sustainable, and acceptable to all parties involved.
Secretary of State Marco Rubio there speaking. Now, high-level delegates from the U.S. and Russia met in Riyadh, but the meeting raised concerns in Europe over Ukraine's absence from the discussion. Joining us now is Greg Sullivan, Bloomberg's Russia economy and government editor in Dubai. Greg, thanks so much for joining us. So what actually comes next after these talks and after a lot of that conversation there and those discussions that we heard from Marco Rubio?
Well, that is a great question. The officials were short on details coming out of those talks last night, though Russian leaders did seem to hail the talks as a success for them, and the U.S. side did signal some progress. It seems likely that there will be more contacts between the two sides now, and potentially building up to a summit. We heard Trump say that he does still want to meet with President Putin, and that's likely to happen soon. There will be probably discussions building up to that, the Leaders' Summit. The other thing that we heard was actually some work towards revitalizing diplomatic missions in each country, and that could potentially include increasing embassy staffs that have been reduced amid deteriorating relationships between the two countries.
And Greg, there are still some differences that remain, of course. This is a complete change from the previous administration. Where are there still gaps here?
Well, the biggest one is obviously in security guarantees for Ukraine. Russia has said repeatedly they don't want to see any NATO peacekeepers in the country. The U.S. has signaled they don't want to put boots on the ground in Ukraine. And Ukraine is really going to need a security guarantee to deter Russia from attacking again. So that is probably the biggest sticking point and the biggest difference that will have to be overcome in any kind of talks. The other thing that came up was sanctions relief, and that's got to raise alarms in Europe. While we heard Rubio say that sanctions were not going to be lifted until any kind of deal was reached, the fact that we're already discussing sanctions relief is probably sending up alarm bells, because Europe has really tried to project a united front with the U.S. against Russia on these issues.
Well, and Europe has not been at the table at this point in time, Greg, with these talks. So what does that mean for Europe's role in this, and also Ukraine, because we've heard quite a bit from Volodymyr Zelensky over the past few days?
That's really the big issue here, is that Ukraine is a party to this conflict and yet is not at the table. Trump does seem to think that he can do a bilateral deal with Russia and then compel others to join. But if he's prioritizing reaching a deal in speed or quickly at the expense of European and Ukrainian security, it's unclear how those two parties could go along with this. So that is a significant concern. As we saw with the sanctions coming up at this point, there must be real alarm in Europe that over where Trump's priorities lie, especially as U.S. officials begin to talk about economic opportunities in Russia. It's a really worrying situation for Ukraine and Europe at this stage.
Right, and coming at a challenging time for both of those blocs. Greg Sullivan, Bloomberg's Russia economy and government editor. Greg, thanks so much for joining us. Let's turn to the Middle East. Hamas says it's ready to exchange its remaining Israel hostages all at once with Palestinian prisoners during the second phase of the Gaza truce. The move could be a step leading to an extended ceasefire and the full withdrawal of Israel's forces from the enclave. But Hamas is refusing to be expelled from the Gaza Strip or disarmed, saying any future arrangements for Gaza will be based on national consensus. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. So, Dan, what does this Hamas offer mean for the ceasefire in Gaza?
Well, I think there's a sense now that Hamas is trying to expedite the negotiations that have been underway in a way that would perhaps preserve the current calm, bring forward reconstruction of the Gaza Strip, and indeed guarantee Hamas's long-term survival in Gaza, despite the fact that from the very first moment when this arrangement was announced by the former U.S. President Biden last year, and certainly something that's been echoed by the current U.S. administration, the ultimate vision is for Gaza to be free of Hamas. Now, Hamas has indicated it might want to cede political power as part of an arrangement. It's given zero indication of being willing to give up its arsenal. That's really the rub as far as Israel is concerned. So right now, what we are currently in the first phase of the truce. Israel, as of yesterday, says it will enter second phase discussions. And Hamas has agreed, potentially as a result of Israel's agreement to join those discussions, to truncate the remaining releases due in this phase over the coming weeks. It appears now it's trying to parlay that offer into a wider scheme, a wider offer that would reduce the timeline and give it an advantage. I don't see Israel agreeing, however, unless Israel is guaranteed a Gaza free of Hamas at the end of this process.
And part of that speaks to the differences, really, Dan, in the plan for Gaza, which we've seen a few Arab leaders at least discussing what their plans would be. There's supposed to be an emergency summit held in Egypt soon. What could come out of that?
Well, I think what you're seeing is the Arab world being galvanized by the Trump plan for Gaza, that jack-in-the-box announcement by the new U.S. president that he believed the United States should take over the Gaza Strip, undertake a years-long makeover of the Gaza Strip. The territory has been shattered by the 16th month. In order to enable that, Trump wants to see a mass relocation of Gaza's Palestinians. He named Egypt and Jordan potentially elsewhere. This is not something the Arab world has been happy about. However, I think it's clear to them, and they've pretty much said this, that having had that gauntlet thrown down, they need to come up with a workable alternative. And it appears that's what they're trying to do, an alternative that would rebuild the Gaza Strip, not require or not entail the removal of Gaza's residents, while at the same time satisfying those core Israeli and U.S. demands that Hamas no longer be in charge and no longer be armed.
Bloomberg's Dan Williams in Jerusalem. Dan, always great to get your reporting. Thanks so much for joining us. And it's reported the IMF has said it's open to a new loan agreement with Lebanon following discussions with its recently appointed finance minister. The new government formed this month ended more than 2.5 years of caretaker leadership. AFP quotes the IMF as saying discussions could include a new program that could help restore debt sustainability and rehabilitate the economy. Now, coming up, hear why MacroVisor says it doesn't think China is looking to escalate the trade war with the U.S. as Trump announces threats to tariffs on car and chip makers. More on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. San Francisco Fed President Mary Daly expects to see more improvement on inflation as interest rates continue to put downward pressure on the economy.
At this point, policy needs to remain restrictive until, from my own vantage point, until I see that we are really continuing to make progress on inflation. At this point, policy's in a good place. We took 100 basis points off the rate last year. That recalibrated policy put it in line with the economy we have. And now we want to be, in my judgment, careful before we make the next adjustment.
Joining us now is Ayesha Tariq, co-founder of MacroVisor there in Abu Dhabi. Ayesha, is there a risk of the Fed remaining too restrictive for too long? What is your take on the inflation trajectory right now in the U.S.?
Good morning, Jennifer. Thank you for having me back. So I think inflation, we expect inflation to actually cool down in the next couple of prints, but we think it will remain noisy. So there's a lot going on in the U.S., obviously, with the tariffs and slowdown in immigration policies. And all of this, we think, will lead to a slowdown in growth and somewhat of a slowdown in inflation as well. But then again, because of the tariffs, we might see increases in prices. So basically, it's a very challenging situation for the Fed to navigate at the moment. And this is why we think that they are taking a wait-and-see approach. Now, whether they're going to make another mistake by being restrictive for too long, we don't know. But if you look at financial conditions right now, financial conditions are quite easy, and the market is doing what it's doing. So I don't think that we have that risk just yet.
Do you think, though, that could start to pop up perhaps in equities? We are seeing at least Asian equities pulling back ever so slightly today. Will it start to very slowly pop up across markets globally?
So I do think it will to a certain extent. Again, over the next couple of months, we think inflation will slow. So we're a little bit neutral on the dollar here. But we are bullish on the dollar for the year. So I do believe that will weigh on markets eventually.
So then let's dig into what we are seeing then in Asia, Ayesha, because we did see Asian stocks, again, continuing to propel forward after DeepSeek and a lot of optimism around AI. Will that get another catalyst to then continue to propel forward?
I do think so. And a lot of this stems from the tariff situation, right? So I think once the tariffs were announced, we did see some retaliation from China. However, it was very measured. It wasn't anything big. And we think that China is doing this so that they can actually fortify their own economy. So this is a good opportunity for them to sort of introduce a few more stimulus measures. And we have this meeting coming up on the 5th of March. So quite likely that may be a time that they introduce some more measures. But also, if you see over the weekend when President Xi actually spoke to the private sector, so it's not just the public sector that he's looking to fortify now, but also the private sector. And we think that this could actually really help drive, foreign capital back to China. And people wanting more exposure even to the tech sector, which is not the U.S. So with China's AI being developed, we think that some people might actually consider investing in the AI stocks in China.
Would you be open to potentially investing in European stocks? We've also seen them doing quite well. There is a lot of uncertainty with the picture as it stands in Europe. But are any of the markets actually catching your eye at this point?
So I think in terms of Europe, I have to admit we missed it a little bit. And, the markets have run up quite a bit. Earnings have come out to be really solid. We're seeing, financials do really well. We're seeing, certain tech companies also fare okay. And all of this is in the face of political uncertainty, as you've rightly, pointed out. However, I think over here, because of the uncertainty, I would take a pause on Europe.
You would take a pause on Europe just because you don't know where things are going to go next?
Exactly so. And because it's run up already so much.
Ayesha, I just want to finish on, because the theme really is uncertainty, gold. We saw Goldman actually predicting 3,100 by the end of the year. What's your outlook?
So we had a target of 3,000, but I don't disagree with Goldman, because when we look at what's happening around the world, and it's not just uncertainty, but there are also fundamental flows coming in. So we have central banks buying gold, and we have portfolio allocations to gold. China, in fact, is doing private, not forcing, but encouraging the private sector as well to invest in gold. So everything considered, we think that, there are fundamental reasons for gold to go higher. So I can't disagree with Goldman here.
All right, we'll leave it there. We're looking at gold at just about 2,929 an ounce. Ayesha Tariq, co-founder of MacroVisor. Ayesha, thanks so much. Always great to get your insights on the show. Now, still ahead, Rwanda is suspending aid cooperation with Belgium amid disagreements over its role in the conflict in the Democratic Republic of Congo. More on the unrest in the region a bit later this hour. Stick with us. This is Bloomberg.
Under the Biden administration, Operation Choke Point was in progress, right? So there's a bit of oppression in the US, and US players, global crypto players are facing great uncertainty. And governments around the world are not really very supportive of crypto. I think we have a fresh reset and restart now. Since President Trump's election, actually we have gotten a lot of approaches by governments all around the world to say, hey, we want to look at this space now. By the virtual fact that US has appointed an AI and crypto czar, represents that these are the two most important industries to support all future sub-economies around the world. And we are seeing fresh optimism. Governments around the world are supporting it.
So you're talking directly with the SEC then about what the regulatory roadmap could look like? Or are you talking with the Trump administration directly?
Well, we give inputs to governments around the world. I think they value our inputs because we are the most regulated exchange by now globally. We are regulated in 21 different jurisdictions.
What does your input to the US government look like? What do you want to see there exactly?
Well, so on the US front, you see very thoughtful appointments, right, in terms of the different, David Sachs as AI and crypto czar, the different appointments to the different agencies, regulatory agencies on that front. And they want to come out with a very good framework. So it's still early days, but as and when there are firm proposals, we're very happy to give inputs on that front.
But what exactly do you want to see, though? I want to understand what would bring you back into that market. What is it exactly?
Well, I think for every country, they have their own concerns, their own interests to take care of. But we want to see a framework, regulatory framework, that is, on the one hand, managing the risk aspects of the industry, but on the other hand, very supportive of innovation and growth aspects, right? If you just focus on the risk aspect of it, you're missing out on all the new innovation that's coming in through this space, right? And it's a very dynamic space on that front.
Do you think that the US is going to take a more business-friendly approach, or do you think it's going to take an approach that's higher on consumer protection? Because I think you've kind of got to go down either VARA, for instance, in Dubai. That's one that's more business-friendly, for instance. Hong Kong, a bit more on the consumer side.
I think the US is going to come out, and this is only my speculation, is it going to be a bespoke framework that really supports innovation, supports growth, but at the same time protect consumers. And all these different aspects are extremely important.
So if you get that kind of framework that's bespoke, is it enough to bring you into the US market?
Well, we always consider our global deployment, right? So we are holding a watching brief on the US. We need to see greater clarity coming out from the US, and we will consider our options at that point in time.
And what would that look like to you, for instance?
It's too early to speculate.
Richard Tang there, Chief Executive Officer of Binance Holding, is speaking with our Annabelle Drewlers there. Let's just take a quick check at where markets are positioned. We mentioned that Tuesday we did see the S&P rally to a new all-time high, still in the green, marginally higher for NASDAQ futures and S&P futures. Eurostock 50 futures looking a bit lower, though. Now, coming up, we have more in just a few minutes. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. U.S. Secretary of State Marco Rubio says sanctions on Russia will remain at least until a deal to end the war in Ukraine is reached. President Trump says he'll probably meet Russian President Putin before the end of February. Meanwhile, Ukraine's Zelensky cancels a trip to Saudi Arabia after being sidelined from talks. Hamas offers to free all remaining Israeli hostages for Palestinian prisoners in the second phase of the truce in exchange for an extended ceasefire and Israel's full withdrawal from the enclave. And President Trump says he's preparing tariffs of around 25% on cars, chips, and pharma imports, with an announcement coming as soon as April. Good morning. I'm Jennifer Zapasaja in Johannesburg, where it's just gone past 7:30 a.m. Welcome to the second hour of Horizons Middle East and Africa. And as we have been paying attention to, a lot of geopolitical news in terms of the potential ceasefire agreement being decided on, but also these tariffs, again, continuing to weigh in on markets, especially overnight, as we mentioned, with President Trump's recent announcement. Let's just take a look at where markets are positioned. Right now, U.S. equity futures marginally higher. It's a continuation of some of the strength that we did see on Tuesday. We saw the S&P reaching a new all-time high propelled by chip makers. We're seeing the U.S. 10-year yield backing off, or a little change right now, I guess you can say, at this point in time. After rising 7 basis points on Tuesday, we heard from Fed Governor Mary Daly, San Francisco Fed Governor Mary Daly, who's again weighing or saying that there needs to be some caution over what we're seeing in the markets until we get a little bit more clarity on inflation. Right now, the 10-year yield at 4.55%. Brent crude up just about 0.2%, trading about $76 a barrel there, as we continue to watch closely what OPEC Plus's next moves on those supply increases are. And gold, a lot of the uncertainty has propelled people into the safe haven right now, but it's down, backing off just about 0.2%. And still, we have Goldman actually raising their year-end target for bullion to $3,100 an ounce. We just heard from Ayesha Tariq, another one of our guests, who is saying potentially we get to 3,000, but still close to pay. We want to pay very close attention to what actually happens with the metal. And finally, I just want to take you here to South Africa, because today we will get the budget from Finance Minister Enoch Godongwana. We've been watching closely the back and forth between the U.S. and South Africa, and so we'll wait to see what, if anything, he has to say on that, and potentially on reviving growth here, as it's been stagnant over the past few days. This is just a look at the dollar rand right now, though it's little change heading into this event. Let's go to markets in Asia, though, and see how they're faring. Avril Hong is standing by in our Singapore studio. Avril, a bit of a down day over there for you.
Yeah, we are tracking losses on the region's benchmark, and this is, of course, following on from Trump's tariff threats. He's threatened higher levies, 25%, right, on autos, chips, pharmaceuticals. But there is a view emerging in the markets that these threats might remain just that it might not be evolving into action. Maybe markets can look past this. That being said, we're seeing losses among Japanese automakers, highlighting as well what we're seeing among the Hong Kong stocks. The Chinese tech names not doing so well today, including the likes of Alibaba. And this, of course, follows on from Baidu reporting weaker revenue. The Chinese chip names are the ones that are doing well. That's interesting to see. Now, we also get about an hour and a half ago HSBC earnings. So we saw a profit beat. All this part of its cost-cutting drive. It also announced a $2 billion share buyback. So a bit firmer on HSBC shares as we came back from the lunch break.
All right, thanks so much, Avril Hong in Singapore for us. Let's continue to dig into the global macro story and talk to one of our guests who's actually touted as somebody who's been able to solve a lot of the mysteries that most economists have not been able to, and that is Torsten Slok, the chief economist at Apollo Global Management. Torsten, there is a great profile of you now available on Bloomberg, and it just gets into how you were able to dig into the data and see a lot of things that many economists and analysts were not able to see. What are you seeing right now potentially that the market is not seeing?
Well, I think what's very important to do at this point is really to watch the incoming data. And if you look at the daily incoming data for the US and the weekly incoming data for the US, it shows that still up to this point, the consumer and the economy is still in great shape. You have the number of people going to restaurants is still strong. The number of people staying at hotels is still strong. The number of people flying on airplanes is still strong. The weekly data for consumer spending is still strong. So across the board, it still is the case that the economy is actually in quite good shape. And that's likely why Mary Daly and others say, well, maybe we should hold off with cutting rates, and maybe we do need to wait a little while longer to figure out exactly what's coming on the tariff front.
Well, and of course, that is the big wild card, right, Torsten, the tariff front. Where do we start to see this start to pull back, I guess? I mean, is it China? Is it in the U.S.?
Well, the key issue, I think, for markets continues to be that at the moment, the starting point for adding tariffs is that inflation is unfortunately too high at around 3%. Remember, the Fed's goal is that inflation should be 2%. If we had started with inflation at 1.5 and added tariffs and therefore more upside pressure on inflation, it would be a very different discussion. But the problem is that we are starting from a point where inflation is already about a full percentage point above the Fed's 2% target. And if now the risk is that we do have tariffs in the different forms that Trump has talked about, putting some upward pressure, it could only be modest, but the trend direction in inflation, if that is higher, that does cause a lot of trouble for markets, and that does cause in particular a lot of trouble for the Fed.
What does that mean then for the Fed and other central banks then, Torsten? Will we start to see more cuts?
Well, it exactly means that rates will have to stay higher for longer, because if inflation is not quite yet under control in the US, that does mean that US rates will stay elevated. That's in sharp contrast to the outlook, in particular for Europe, but also for most emerging markets. For Europe, we have, unfortunately, some headwinds coming from the slowdown in China, some headwinds coming from low productivity, some headwinds coming from energy transition. We also have some headwinds from the fact that we have still not much clarity on the leadership in terms of political leadership in Germany, in France, several countries. We still have, over the next several quarters, some more elections that potentially will give us some more idea about what direction is Europe going in. But at the moment, the US is clearly the leader with rates higher for longer, whereas the outlook, in particular for Europe, continues to just be quite substantially to the downside.
Torsten, do you expect then most of the market to continue to pour into safe havens just in the meantime, or do you expect potentially there will be other opportunities that investors see at this point?
I do think that in particular US fixed income, and especially US credit, and of course in particular private credit, will continue to see significant inflows. The challenge for the S&P 500 is that the 10 biggest stocks, in particular of course the tech companies, they make up 40% of the index. And if you have something that makes up 40% of the index, that goes completely against page 1 in your finance textbook, which says you should be diversified. And you are not diversified if you take $100 fresh and put it into the S&P 500 today, because it really is mainly all levered essentially to NVIDIA and to the Magnificent Seven. So that's why investors should really look at, in particular, public equities in the US from the perspective of saying, am I diversified or am I not? And why not, now that base rates and base yields are higher, why not cut some coupons and sleep well at night and get some higher level of returns in fixed income now that interest rates are higher? So that's why I do expect, to your question, Jen, that US assets will likely continue to see inflows. But I do also think at the same time it's important to think hard about what is the valuation at the moment and the concentration and the correlation that we're seeing, especially in public equities in the US.
Torsten, for the emerging market space, though, is it kind of just a wait-and-see game? We mentioned here in South Africa we're waiting for the finance minister to reveal the budget. Is it a wait-and-see until we get some clarity on tariffs in order to get some direction?
Yeah, I do think, and in summary, I think that the headwinds to emerging markets, including also South Africa, but in particular, of course, also here in the Middle East and Asia, is that there are some serious challenges, not only from tariffs, but there is also this very serious challenge that China is slowing down. China is facing three headwinds, one from demographics. Because of the one-child policy, the working age population will shrink from 1 billion to 900 million over the next 10 years, according to the United Nations. That's a headwind to growth, like we have seen in Japan, where demographics are slowing growth. You're also seeing a housing bubble burst in China. You're also seeing a trade war in China, both with the US and Europe. All that slowdown in China is weighing, unfortunately, on a lot of emerging markets. So you could summarize it as there is a headwind coming from not only tariffs, but there's also a headwind coming from some structural challenges, in particular with growth in China, weighing on the outlook for EM.
Yeah, we have to leave it there, but I definitely encourage everyone to read the article on Torsten titled "How Torsten Slok Solved a Sherlock Holmes Economic Mystery." Torsten, great to get you on, Chief Economist at Apollo Global Management. Thanks so much for your time. Now, let's turn back to the African region. Rwanda is stopping aid cooperation with Belgium, accusing it of trying to sabotage its access to financing. The dispute comes amid disagreements over Rwanda's role in the conflict in Eastern Democratic Republic of Congo. For more, Bloomberg's Ndiro Oganga joins us now from Kigali, Rwanda. So, Ndiro, is Rwanda beginning to actually feel the weight of international pressure?
Hi, Jen. So from the inside, they remain very gallant. They're actually saying they're not going to be bullied or into compromising their national security. The goal has always been to maintain a safe and secure border and also to put an end to ethnic extremism and tension that they've experienced between them and DRC. They're accusing Belgium of politicizing development and also siding with Rwanda or with DRC. The president has gone as far as saying that Belgium is part of the history and the problem in the Democratic Republic of Congo. On the other hand, Belgium is accusing Rwanda of supporting M23 rebels who've taken over 2 cities in eastern DRC. The fighting has left 3,000 people dead. Hundreds of thousands have been displaced. And in light of Rwanda's suspension, Belgium says actually they were in the process of also reviewing their bilateral partnership with Rwanda because Rwanda has violated the sovereign and territorial integrity of DRC. So this suspension by Rwanda means that the 2024 to 2029 bilateral aid program to a tune of $99 million could be going down the drain. And Belgium is saying in as much as tension is high right now, everybody needs to maintain a level-headed approach so that the suspension is done in a professional manner and that all the good that they've been able to do in the last couple of years is not wasted and people don't end up suffering.
And Ndiro, there's been concern about this spreading. Now we're getting word that Uganda is deploying troops into the DRC. What does this mean?
It just means that Uganda is trying to quell the ethnic tension between them and DRC along the border. The military says that they're going to maintain a forward posture and they're trying to prevent rebels in DRC from trying to exploit the situation and spill that violence and that fighting into Uganda. There's been fighting along the border. Civilian lives have been lost, so they're just trying to manage that situation.
We'll leave it there. Bloomberg's Ndiro Oganga in Kigali, Rwanda for us. Ndiro, thanks so much, as always. Now, coming up, we look at how President Trump's aid freeze is having an impact on strategic projects for the U.S. and Africa. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. A $1 billion minerals project in Africa is facing delays because of President Trump's foreign aid freeze policy. The Lobito Corridor Railway project, strategic to the U.S., is meant to carry minerals from Central Africa to Angola for export to the West. But the uncertainty of policy could provide a potential opening for rivals. Joining us now is Bloomberg's energy reporter, Paul Burkhart, who is in Cape Town for us. So, Paul, how exactly is this freeze on U.S. aid going to affect minerals for Africa?
Hi, Jen. So what we do know about the aid freeze, a lot of people are aware of the health programs that were affected, but it also, a lot of these smaller U.S. agencies, or USAID, for example, they fund a lot of projects in their early stages, whether they're feasibility, environmental studies, and that money is really needed, and those steps are really needed to get these projects off the ground. So what we found was one of the expansions of the Libido Railway, which is a project to get critical minerals to the U.S. from Africa, that some of the funding is in question, and some of the funding has been disrupted by that aid freeze. So it really just has like a wider swath, and it's starting to get into potential disruptions for energy and critical minerals.
Well, and Paul, just a few months ago, we were watching former President Biden in Angola touting the Libido corridor and this partnership between the U.S. So does this mean that the Trump administration is not concerned about needing these minerals?
Well, what we do know from the Trump administration is obviously the critical minerals have come up. It's come up recently in this proposed deal on Ukraine, that the U.S. is interested in securing critical minerals. I think Greenland has come up with rare earths. So we do know that the Trump administration, critical minerals forms a part of their policy. But we don't know exactly how that's going to play out with Libido. As you mentioned, Biden was here, and really kind of championed that project towards the end of his administration. So how the Trump administration sees it, we're not sure. But then also just the disruption and the confusion around what happens with the funding and where that comes from is really unknown by a lot of people on the ground. And the fear that's come up is that China and other countries that have been interested in sub-Saharan Africa recently, maybe UAE and Saudi Arabia, could step in and take over some of these projects. And then the U.S., having tried to carve in a foothold, being behind schedule in terms of like China's dominance on sub-Saharan Africa's critical minerals, that it would lose kind of the ground that it's gained already.
And Paul, what does this mean for some of the host countries where these mines and these minerals are being transported?
Yeah, it means a potential disruption or delay of some of these projects. If it's an energy project, then all these, like all the projections on economic growth from when this electricity would start, that gets remodeled or that gets delayed. For critical minerals, again, whether it's losing part of that project or just delays or loss of influence, the consequences are quite important. So yeah.
Right. All right. Bloomberg's energy reporter Paul Burkhart in Cape Town. Paul, thanks so much for joining us and for your reporting. Now, for a look at some of the other stories we're following this morning, Bloomberg has learned that Elon Musk's social media company X is in talks to raise money from investors at a $44 billion valuation. That's the same price that the Tesla billionaire paid for the company in 2022. The funding round would be a remarkable turn of fortunes for X after Musk's takeover and overhaul caused many users and advertisers to flee. Also, HSBC shares are higher in Hong Kong today after it reported fourth quarter pre-tax profit of $2.3 billion, beating estimates. Europe's largest bank says it will incur $1.8 billion in costs over the next 2 years as it embarks on a global restructuring program that's seen it close some of its businesses and slash management ranks. HSBC also detailed plans for a $2 billion share buyback. Now, coming up, Saudi Arabia hosted the highest level U.S.-Russia talks since Moscow's invasion of Ukraine. We look at the kingdom's growing role on the global stage. That's next. This is Bloomberg.